Joining me today is Ashish Wakankar. Ashish, thank you very much for joining us. We just had a historic summit. We just witnessed a historic summit between US President Donald Trump and Vladimir Putin, though there is no deal, as Donald Trump has said. I want to understand from you, what is going to be the reaction of the Indian market when it opens on Monday?
Thank you, Pranav. Thank you for inviting me to your show, and good morning to everyone. I think before we get into that, some of the developments that have taken place in the last 1 or 2 days, apart from, of course, this summit, is something more equally historic or more historic as far as India is concerned. In the last 18 years, there has been no upgrade in S&P's India rating. So S&P has, upgraded India. So I think one of the most important things as far as the economy is concerned is this. See, look at it that once the tariffs were imposed 25%, then subsequently again 25%, which are going to be effective from August 27. There was a lot of concern. The businesses were concerned, and naturally, as a function of that, the markets were concerned. But everybody had their opinion, and people were giving their view as to how it will impact, by when it will impact, so on and so forth. Take a look at this. S&P has come up and said, it's upgrading India's rating, which clearly indicates that the rating agency, which is respected and which is known across the world, is saying that, the impact of this tariff, so it's this rating upgrade has come after 50% hike, right? So really, they are not concerned as far as the Indian economy is concerned, Indian economy's growth is concerned. So things look, on their path as India moves towards being the top 3 economies of the world by 2030. So I think this is one of the things that I think we need to take a look at. Secondly, if one were to, look at the announcements that were made, or the Prime Minister's speech that he made yesterday, some of the most path-breaking things, were mentioned, with the entire speech, focused on how India is going to now progress from here as it moves from a 4 trillion economy to 10 trillion and then further up. So I think the more important things as far as the markets, because what are markets? Markets are ultimately future discounting machines, right? I mean, you're discounting future cash flow. So as far as India is concerned, I think we are going to have semiconductors rolling out after a gap of almost 50-60 years. There has been a delay. We're late to this party. We were one of the pioneers in taking lead in this. But we did not do much about it. We maintained the lab scale, presence in semiconductors, and the world went ahead. But come year end, and you will have the semiconductors starting to roll out. Plus, there is a task force that is going to be set up, which is going to focus and which is going to, remove the obstacles or the challenges that businesses face or the economy will faces while it is moving upwards. So a task force being put in place. So all these things, if you look at it in a nutshell, it clearly indicates one thing, that as far as the impact of the tariffs are concerned, one, S&P is not looking at it. 2, we are focused on our journey as we move upward to a 10 trillion economy. And coming back to the summit that was held yesterday, one of the important things. So while there was no agreement, there was no announcement on the Ukraine crisis. What is important, and that's what the president also said. So the US president said the outcome of this summit is 10 out of 10, right? Then the Russian president said that US-Russia bilateral trade, ever since the new regime has come in place in US, has gone up by 20%. Now, what exactly are the tariffs of this 25 plus 25% on India about doing business with Russia, whereas the person who's imposed tariffs on us, he himself has seen 20% upward movement. Take a look at what Europe continues to export. So not many people on your show may know, but I still want to mention 70% of LNG today, gas imports of Europe, come from Russia. Russia still continues to export automobiles and other machinery, heavy equipment to Russia. US continues to export agri. So now, after this summit, one thing is very clear. what are these tariffs on India about? What is India being penalized about? When you yourself are contending, this is a question.
Correct.
Coming back to your question, Pranav, there is no negative that has come out of this summit. So, that if one were to live in a world of binaries, then the outcome could have been positive or negative, right?
Okay.
So there is no negative output. There is no negative outcome out of this. So very clearly, as far as the markets are concerned, they will heave a sigh of relief that, what? No negative. The talks did not fail. We are not going to. So people had started saying that if this fails, they would tariffs would go up by another 25. Somebody said another 50. There was no limit to it. At least that part is behind. Now, what is going to happen is the markets are going to sit and take a look at how the talks between the US president and NATO and its allies and EU go on, because the discussions that took place will be taken over there, and over a period of time, we will see the outcome. But by and large, I think it's a positive step forward. There is nothing negative that has come out. In the own words of the US president, 10 out of 10.
Perfect. I mean, so we're necessarily looking at three boosters. One, the S&P ratings to BBB, the Prime Minister's speech on August 15, and Donald Trump and Putin's meeting, all three of which indicate a positive sign. I want to come back to you with something Donald Trump said. He said that he may or may not impose those tariffs. That is what he said. I want to understand from you what is going to be the short-term and long-term impact of this may or may not, this one line that he has said about oil tariffs.
See, very clearly, if you look at the oil tariffs and the reaction of this, so if we go back to November 2022, then there is an article in Reuters where the then Treasury Secretary of US had clearly said, and I quote, India can go ahead and buy as much oil as it wants from Russia. The then US ambassador to India, if you look at his interview, which was in the first week of August 2025, recent interview in NYT, that also he says that, US wanted somebody to, take that oil off the market. Otherwise, it could have had an impact or a snowballing impact on the oil prices. It was a policy decision. And they, as in India, did what we wanted them to do. So, and he goes on to say, quietly, everybody appreciated it. So this is what I'm quoting from the articles that are there in the public domain, right? So the incremental tariffs may or may not be there, or the existing tariffs may or may not continue. As I said, the markets are going to sit and look at what is the outcome now of the discussion with NATO. Incrementally, out of yesterday's discussion, there is nothing negative. Okay. If at all one were to look at it, then it is a positive, it's a step forward. So I think the markets do understand this, and I don't know, it's no point second guessing the market how it will react in the short term, or how somebody might react tomorrow. But very clearly, there's nothing negative, and I think this brings relief.
Okay. In the first part of this year, almost 1.25 lakh crore worth withdrawn by the FIIs. Do you see a return of the global investors?
Global investors, or investors by their very nature, are entities which chase returns. So if one were to look at how India has, or Indian government has been progressing very clearly right from the COVID period, wherein we decided not to give stimulus, we decided not to push consumption, we decided to go the more arduous, painful path of putting infrastructure in place. If you look at yesterday's announcement, if you look at the movement of, the tax collection, the GST collection, and the investment of that in building infrastructure across the country, then I think very clearly the economy is on the right path, is what global investors see. Look at the amount of money that the foreign investors have invested in the country. It is close to about $700 billion is what they have put in the Indian market, of which as of July end, about 10 billion has gone out, which is not even 1.5-2% of the amount invested. Most importantly, the factor which gives me huge amount of confidence or happiness is the movement of Indians, particularly Indian youth, from being fixated to physical savings to financial savings. So I think there are two unsung heroes over here in this country, Pranav, who need to be appreciated, who need to be acknowledged. One is the team or the person who came up with this tagline, mutual funds sahi hai, and the other team or person who came up with this concept of SIP, systematic investment plan, things will keep on happening in the interim. There will be volatilities, there will be news flow which will rattle the markets in the short term, and in the long term. Look at it from 11th economy, largest economy in the world, to the 4th largest economy has been the movement in just under 11 years. So honestly, doesn't really matter what happens in the short term. One thing is very clear, is that the foreign investors or investors by their own nature will look at returns. And if this economy, look at it, just look at yesterday's speech. I think I urged India's youth to particularly, because this is a forward-looking measure that the government has announced. GST rationalization. We're coming in. We proposed two slabs only. We're talking of growth in almost 10x growth in nuclear energy production. We are moving to in semiconductors. We are going to roll out. Take a look at the announcement on 1 lakh crore or 1 trillion rupees to fresh graduates. So all in all, the entire focus has been towards the Indian economy. Task force, I mentioned about it, to ensure that we reach our goal of 10 trillion economy. The impact of this will be on the economy. The impact of the economy will be on the companies. So in the long term, the benefits of this will accrue, and investors, wherever they are, they may be domestic, they may be foreign, they will have to look at India. Ultimately, they'll chase returns.
Okay. Ashish, to conclude this or wrap this, Nifty hasn't over the past, would you like to share? I know you're more of a fundamental person, but then if we really have to talk about numbers, is there any particular return? Because Nifty over the past 1 year has given about 10% returns, whereas historically it has given much higher than that. Mutual funds, in fact, give 15% returns. Are we associating any numbers to Nifty Sensex over the next 5 years?
As I said, ultimately the markets have to track the economy. So if the economic, in the nominal terms, if the economy continues to grow at, say, we are growing at around 6.5–7% now. So in the in the nominal terms, if we continue to grow at around, say, 10–11%, do better than that. So you can expect the corporate earnings to track, and they do, as you rightly said. The corporate earnings will track the economy. So if the economy continues to grow at the current pace, I think the corporate earnings and the markets which track the corporate earnings, that's the trend. That's what we've seen.
Thank you very much, Ashish. Thanks a lot for joining us and giving us these details.
Thank you.
Thank you.